FTX was one of the biggest cryptocurrency exchanges in the world until its dramatic collapse in early November 2022. With large investments from notable companies, FTX developed to become one of the leading exchanges just 3 years after its launch in 2019 by its founder Sam Bankman-Fried. It was even backed by athletes like Tom Brady. Despite reaching its peak and a net worth of around $18 billion, the exchange collapsed and declared bankruptcy on November 11, 2022. Its founder Sam Bankman-Fried has also been accused of creating a fraudulent cryptocurrency scheme designed to take advantage of unsophisticated investors across the country. So the big question is, what happened to FTX? How did FTX go bankrupt so quickly? And is Bankman-Fried involved in any of this? If you want to find out, keep watching until the end. Hello, and welcome to the crypto world. FTX was a network of distinct companies that were all controlled by Bankman-Fried and his co-founder Gary Wang. The current CEO of FTX, John Ray III, described the company as having four main silos: a venture capital arm that made investments in other companies, a hedge fund that traded cryptocurrencies for profit, and two exchanges, one of which was allegedly regulated for the US market, and the other where the rules were much more lax. FTX, which stands for Future Exchange, was founded on Alameda Research's reputation in the industry as one of the largest cryptocurrency traders by volume. The company's stated focus was derivatives, leverage trading, and a professional approach, with the goal of moving the derivatives space towards becoming institutional grade. By 2021, FTX had become the second largest cryptocurrency exchange in the world, trailing only Binance, with a market capitalization of around $30 billion before it all went downhill. If you want to learn more about how FTX got started, you can watch the video we made on it. So how did FTX fall? The collapse of FTX occurred over a 10-day period in November 2022. The crisis was triggered by a CoinDesk scoop on November 2nd that revealed Alameda Research, the quant trading firm also run by Bankman-Fried, had a $5 billion position in FTT, the native token of FTX. According to the report, Alameda's investment foundation was also invested in FTT, the token created by its sister company, rather than a fiat currency or another cryptocurrency. This sparked concern in the cryptocurrency industry about Bankman-Fried's companies, Fried's undisclosed leverage, and solvency. It was revealed that FTX's exchange had more liquidity when Alameda was the biggest trader there. All of FTX's known wallet addresses received liquidity from Alameda's known wallets between 1st of June 2022 and the 22nd of July 2022, which accounted for 10% of Tether transfers and 30% of USD coin transfers on the exchange. Alameda wallets were also the biggest stablecoin depositors. After a string of losses for Alameda Research in May and June 2022, according to unnamed sources in the Wall Street Journal, FTX decided to lend the trading company more than half of its clients' assets, which was specifically against the terms and service of FTX. Alameda Research had a sizable quantity of FTT, FTX native token, according to CoinDesk article from the day before the crisis, and this FTT holdings made up a sizable chunk of their assets. FTT tokens are worth $5.1 billion according to CoinDesk, and Alameda had $3.66 billion in unlocked FTT, $2.16 billion in FTT collateral, and $292 million in locked FTT according to its financial sheet. According to the leaked financial documents from Alameda Research, the trading firm's holdings of the FTX native token FTT tighten the alleged intimate relationship between the trading firm and FTX. Essentially, a cryptocurrency created by sister company FTX accounts for billions of dollars in Alameda's value. The documents published in the news outlet CoinDesk revealed that the group's hedge fund, Alameda, was utilizing FTT to make dangerous loans and effectively trading against the company's stock. On November 6, Binance, the world's largest crypto exchange, announced that it would sell its entire position in FTT tokens, roughly 23 million FTT tokens worth $529 million. Zhao, Binance CEO, revealed that Binance planned to liquidate its FTT holdings on November 7, 2022. This decision to liquidate the exchange FTT position was based on risk management following the collapse of the Terra Luna crypto token earlier in 2022. On November 8th, the price of FTT had plummeted to under $6, and CZ disclosed that Binance had made a non-binding deal to buy the entirety of FTX. The acquisition depended crucially on a financial due diligence examination of FTX. Bloomberg reported on November 9th that U.S. federal agencies were investigating FTX, and Binance's promise of a rescue was short-lived, as the company pulled out of the deal the next day. They said they were canceling the FTX deal because corporate due diligence raised concerns about mishandling of customer funds, among other things. On November 10th, SBF announced the closure of Alameda Research, and all assets owned by FTX were frozen by Bahamas regulators following news that Bankman-Fried was seeking up to $8 billion in capital to bail out the exchange. On the same day, the California Department of Financial Protection and Innovation announced that it had initiated an investigation of FTX. Also, the entire team of the FTX Future Fund, which had invested $160 million in various projects and was inspired by effective altruism, resigned. Following this, on November 11th, FTX, FTX.US, Alameda, and other affiliates declared bankruptcy, and SBF steps down as CEO, while John J. Ray III, best known for leading the dissolution of Enron, took over as the new CEO of FTX. Within hours of filing for bankruptcy, the exchange was hacked. Elliptic detected unauthorized transactions that may have stolen close to $500 million in assets. The hacker allegedly used on-chain spoofing to drain wallets for several days before investing the funds in Ethereum, or ETH. On November 5th, a class action complaint alleged consumer fraud was filed in Florida against FTX and several well-known brand ambassadors, including Larry David, Tom Brady, Gisele Bündchen, Kevin O'Leary, Naomi Osaka, Shaquille O'Neal, and Stephen Curry. Tax papers showed that FTX and Alameda Research lost $3.7 billion combined between 2019 and 2021, a long time before the present scandal, showing that things in the SBF empire were never as prosperous as they may have seemed. Before we proceed with the rest of the video, make sure to check out the rest of the other videos on our channel, like and comment on this video, and subscribe to never miss a video. According to a report in the Wall Street Journal in 2022, FTX loaned Alameda Research $10 billion in assets belonging to its clients. Caroline Ellison, the current CEO of Alameda, revealed to the other Alameda workers that she, Sam Bankman-Fried, Gary Wang, and Nishad Singh were aware of that choice. The New York Times cited an unnamed source who made the same claim. The money was partially used to repay debts Alameda had acquired to make investments, according to Ellison. Ray said that FTX employed software to hide the misappropriation of client monies. Following an investigation, the legal and financial teams at FTX discovered that Bankman-Fried had set up a backdoor in the company's custom software-built bookkeeping system, enabling him to run commands that could alter the company's records without informing anyone else, including outside auditors. Because of this configuration, flags at FTX claim that the transfer of the $10 billion in money to Alameda did not result in external compliance. On November 21st, a video with a blue checkmark purporting to be Bankman-Fried urging impacted FTX users to visit a webpage to receive compensation via a cryptocurrency giveaway was discovered on Twitter under a fake SBF account. This was why founder and ex-CEO Sam Bankman-Fried has been accused of creating a fraudulent cryptocurrency scheme designed to take advantage of unsophisticated investors across the country. Aside from the affiliate companies affected by the FTX collapse, such as BlockFi and Genesis Global, the FTX collapse has a broader impact in the crypto world. As the largest collapse in cryptocurrency history, FTX may deter investors who are already wary due to concerns about stability and security. Customers on the FTX platform may not be able to recover their assets, which could lead to legal action. The United States Securities and Exchange Commission, or SEC, and other regulators may see FTX's demise as justification for tightening regulatory scrutiny of cryptocurrencies, and Congress may be more inclined to step in and create new laws governing digital tokens and exchanges. Currently, the future of FTX as a cryptocurrency exchange is in serious jeopardy, even with the new CEO. Withdrawals have been disabled as of mid-November 2022, and the company strongly advises against depositing, according to a notice on the FTX website. Whether or not the crypto exchange will get back up remains to be seen. Thanks for watching. What are your thoughts on FTX's demise? Please leave your comments in the section below. Also, if you want to learn more about cryptocurrencies and keep up with the latest news in the crypto space, turn on the notifications button to be notified whenever we upload new videos like this.